The retail apocalypse is here, and it's worse than anyone could have predicted. In just the first month of 2025, we've already seen 15 major retailers announcing massive store closures or heading straight into bankruptcy. This isn't just another business cycle. We're witnessing the largest retail collapse in American history. Remember walking into Bed Bath & Beyond just a few years ago? Well, they're not the only ones disappearing from our streets anymore. The landscape of American retail is transforming before our eyes, and the implications for our economy are staggering. Let's dive into the 15 major retailers that are literally collapsing right now, and more importantly, what this means for your money and investments. First up is Macy's, the iconic department store that's been a cornerstone of American retail since 1858. They just announced the closure of 150 stores nationwide. That's nearly a third of their total locations. The company's stock has plummeted 60% in the last year alone, and their recent announcement to lay off 2,000 corporate employees signals a desperate attempt to stay afloat. But here's what's really concerning. Macy's isn't just closing unprofitable stores. They're shuttering locations that were actually making money, just not enough to justify keeping them open in this new retail environment. Next, we have JCPenney, which is facing its second bankruptcy in less than 5 years. After emerging from their 2020 bankruptcy, they promised a turnaround, but the numbers tell a different story. Their foot traffic is down 45% compared to pre-pandemic levels, and they're closing another 100 stores by summer. The real estate they're leaving behind is creating ghost malls across America, leading to a domino effect that's devastating local economies. Gap Inc., including their Banana Republic and Old Navy brands, is third on our list. They're closing 350 stores across North America, representing their largest consolidation ever. What's particularly alarming is that Old Navy, once their growth engine, is now their biggest liability. Their attempt to pivot to online sales has been hampered by supply chain issues and increasing competition from fast fashion retailers. Fourth is Party City, which just filed for Chapter 11 bankruptcy protection. They're closing 400 stores nationwide, and here's the kicker. They were profitable during the pandemic, but couldn't survive the post-COVID retail environment. The rise of dollar stores and online party supply retailers has essentially made their business model obsolete. Fifth, we're seeing Tuesday Morning completely liquidating all remaining stores. They've already closed 263 locations, and now the remaining 200 are going dark. This isn't just about competition from Amazon, it's about a fundamental shift in how Americans shop for home goods. Foot Locker is sixth on our list, announcing the closure of 400 mall locations. They're pivoting to standalone stores, but analysts are skeptical about their survival in a direct-to-consumer world where Nike and Adidas are increasingly selling straight to customers. Seventh is Five Below, which might surprise many since they were considered a retail success story. They're closing 200 stores and shifting focus to their online presence, but their margins are getting squeezed by rising shipping costs and inflation. Dollar Tree and Family Dollar, number 8 on our list, are closing 600 locations combined. This is particularly concerning because dollar stores were supposed to be recession-proof. When even the discount retailers are struggling, it's a sign of deeper economic issues. Ninth is Nordstrom, which is closing all of their Nordstrom Rack locations. That's 247 stores. Their luxury business model is failing to attract younger consumers, and their attempt to capture the off-price market has backfired. Best Buy comes in at number 10, announcing the closure of 50 large format stores and 125 smaller locations. They're struggling to compete with online electronics retailers, and their Geek Squad service isn't enough to keep customers coming back. Express is 11th on our list, closing 150 stores after failing to connect with younger shoppers. Their attempt to rebrand as a modern fashion destination hasn't resonated, and their debt load is becoming unsustainable. 12th is Rite Aid, which is closing 500 locations following their bankruptcy filing. The pharmacy chain couldn't compete with CVS and Walgreens, and their attempt to modernize came too late. Lucky Brand, number 13, is closing all remaining stores after their second bankruptcy in 3 years. The denim retailer couldn't adapt to changing fashion trends and increasing competition from direct-to-consumer brands. 14th is Petco, surprisingly, which is closing 150 stores despite the pet industry boom during the pandemic. Online competitors like Chewy have eaten into their market share, and their veterinary services haven't generated the expected revenue. Finally, number 15 is Office Depot, closing 300 stores as they struggle to remain relevant in a digital world. Their business model, heavily dependent on physical locations, simply doesn't work anymore. This retail apocalypse isn't just about changing shopping habits. It's a perfect storm of rising interest rates, inflation, changing consumer preferences, and the continued growth of e-commerce. The implications are far-reaching. Commercial real estate values are plummeting. Hundreds of thousands of retail jobs are disappearing, and local tax bases are eroding. For investors, this presents both challenges and opportunities. Real estate investment trusts, REITs, focused on retail properties are particularly vulnerable, but companies specializing in warehouse and logistics facilities are thriving. The key is to understand that this isn't a temporary downturn. It's a fundamental restructuring of American retail. What should you do with this information? First, if you're invested in retail stocks or REITs, it's crucial to review your portfolio immediately. Second, consider the broader economic implications. This retail collapse could be a leading indicator of a larger economic downturn. Finally, watch for opportunities in emerging retail models and e-commerce infrastructure. If you want to stay ahead of these market shifts and protect your investments, hit subscribe and turn on notifications. I'll be covering these developments in detail, including specific investment strategies and opportunities arising from this retail transformation. Drop a comment below with your thoughts on which retailers you think will survive this apocalypse, and let's discuss the future of American retail together. Remember, in times of major market shifts like this, being informed and adaptable is your best defense. Stay tuned for more analysis and actionable insights on navigating this changing economic landscape.